Now, some people would say, what about the responsibility of the people getting into the loan? Because as I hear it, and maybe I'm wrong, but as I hear it from you, you're saying that basically the people in charge, the people giving the loans, the banks and whoever, are all at fault here. And that the people just wanting to buy a house, it may have been low income or middle income or couldn't afford everything, that they're pretty much absolved of this. But I think there are people out there. First, am I accurate that that's what you think?
I believe the banks, by design, created this mess we're in. They were seduced, they being property owners, whether it was a home or a commercial building, they were seduced by what's called teaser rates. They would qualify at a rate of interest that was very, very low, which was absolutely unsustainable from day one. And they were encouraged to take that. And then appraisals. Appraisers, we know, they were intimidated into giving higher appraisals so that the loan could go through.
So they would lie about how much a house was actually worth?
Absolutely.
Okay, all right. But is there not any responsibility at all on the part of the homeowners? And the reason I ask that, and this is what a lot of people say, that the people getting into the loans and trying to get these houses themselves should have maybe known a little better. And I can give an example of that. My husband and I looked to get into home ownership a couple years ago when all of this was just beginning. There were classes that you could take and that kind of thing. And we sat and we looked at everything that we could pay, you know. And we were like, there's no way we can get a house right now. We've got to wait. And so we didn't. And, you know, probably thankfully now, you know, since hindsight is 2020. But so is there no responsibility at all? I mean, shouldn't some of the folks getting into trouble with foreclosures and things like that also have said, well, I know I'm kind of struggling here financially. I can't afford a house right now, so I'm just going to wait.
If the system had been originally structured to deal with these property owners, to deal with them fairly and in good faith, yes. But as you'll see in a little bit, crimes were committed. That's not good faith. That's not fair dealing. And the ads were very seductive.
Okay, okay.
Low payments, and you got your home.
Okay, all right. So you're looking at three-part responsibility or three-part blame here, basically, right? You're looking at blame to the brokers, blame on the real estate agents, and blame on the banks. Is that accurate, or are there more players here that blame can be passed on to?
Well, one, as you said, was the property owner. There probably is some culpability, but once again, they were not treated fairly, and they were not given the information in good faith, in my opinion and the opinion of a lot of attorneys general around the country. As far as brokers and agents, they got aggressive. They fibbed. They outright lied and probably did things they shouldn't have done on the loan applications, yes. But they were also encouraged to do so by the banks. And they would receive calls. This is what you can do. Why don't you do this? They look the other way. I'm in contact, as I said, with tens of thousands of agents and brokers who've been students. And there is some culpability to be shared.
Okay, all right, that's fair. So we talked a little bit about the bad loans and what makes them bad. But you've mentioned to me in the past about shadow organizations. Shadow organizations, you say like Lehman Brothers and Bear Stearns. How are they shadow organizations? I mean, we know who they are. We know that they exist. We know that they're there. How are they shadow organizations in all of this?
Since they don't take deposits like a normal bank, they're not regulated. So banks initially, Citibank was the first one, would create special investment vehicles to buy these toxic assets. They were arm's length. They did not affect the originator, the creator of the special investment vehicle.
So when you say special investment vehicle, you're talking about like new policies, basically.
It was a pool. It was a pool of money.
Oh, okay.
A pool of money so that they could buy the toxic loans. And then we had, as you mentioned, Bear Stearns. We have Goldman Sachs. They're not regulated. They don't take deposits. They didn't fall under the rules of the regulatory agencies, and they got away with murder. They have plundered this country and continue to do so.
Okay. And then, so there's, you talk about things that people can do, basically, right, to help themselves, things that the homeowners can do in a situation like this, things that investors can do. Can you
Sure.
explain?
We should probably talk about MERS first, but I'll just...
You know what? That's a good idea, because I know that it all is connected like that.
together.
Okay. So tell us what MERS is first.
MERS is an acronym for Mortgage Electronic Registry System. It was put together by Bank of America, Wells Fargo, Citibank, Chase, the ones who own MERS. And it was done to facilitate the movement of a loan from, let's say, a mortgage broker to a bank, to a pool, to another lender, maybe a dozen times. I have a chart of one that I received recently. As long as I've been doing this, it took me a couple of minutes to look at all the places and how all of this was transferred improperly. You have two instruments, two pieces of paper. One is the note. That's my promise to pay you. I'm going to secure it by my house. So in many states it's a mortgage. Here we call it a deed of trust in California. And what that does, it gives you my home without giving you possession as collateral for this note. Well, in the rush to aggregate these loans and put them in these phony baloney pools, many of the notes were lost. And when the assignments took place, when MERS did the assignments, they named themselves, MERS, as the nominee for a lender. However, the problem is they assigned a beneficial interest in the mortgage, in the deed of trust, not the note.
Okay.
All states have laws that say in order to have standing to foreclose, you must have a copy of the original note and the deed of trust. It's not good enough to say that you have a beneficial interest in this deed of trust, because that's nothing. Can I give you some examples?
Sure, yeah. But what you're saying here is that basically the original entity, the original bank that made a mortgage, or that gave a loan to somebody to pay a mortgage on their home, disappeared into MERS, into the, right?
You could say it disappeared, right?
Okay, and so, and when that happened, you're saying that that's where some of the illegality is.
Absolutely.
That there's a new organization that's got the original note and they shouldn't have it. Is that what you're saying?
Sometimes they simply don't know where the note is.
Okay.
I will show you this quote. It is from the county recorder, Salt Lake County, Utah, when MERS was originated, long ago, 1997. It smelled like it could be a scam from hell.
H-E-double a hockey stick. See,
yeah, okay.
So that bad. Like
the
county registrar's office, the county recorder's office in Salt Lake City themselves has said that MERS is a bad deal.
Long time ago.
Okay.
And what has happened, because MERS is a scheme, as many of them are saying, to avoid paying recording fees to the county recorders. California is suing Bank of America and MERS. If the banks lose, it could be $60 to $120 billion. It could topple the banks. That's one state. There are other states also suing because they evaded the process of recording title properly, and they didn't pay. However, what they did, MERS charges a fee for the smaller banks. They collected the money. The counties did not. Our country has a system for transferring title, and they evaded it.
Okay. So you say there's investigations going on
Absolutely.
right now then with attorneys general. California itself is suing right now the banks, one of the banks, because of it. But there's investigations going on in all 50 states?
All 50.
On just on this MERS alone?
Absolutely.
And what can they find? I mean, if they find that these people, these banks, did all of this illegal activity, and the banks are toppled, that affects all of us.
Well, they created this huge bubble And then they took all the bailout money and they paid themselves giant, what do you call those, bonuses.
Yeah.
If somebody's going to topple, we get a choice. It can be the homeowner or it can be the bank. Now, my choice would be the bank.
Right.
They created all this hot air. They should be the ones that pay.
How can that happen? I mean, the banks are the most powerful, I guess, entities everywhere, internationally, right? So if these giant banks right now topple, what does that mean for you and me?
Well, the smaller banks could step into place. We're an unbelievably resilient country. We have what's fair, what's equitable, what's moral, what's just, and none of those words apply to these banks. So, yeah, it's going to be painful, but it's not right what they've done.